In the 1900s, Andrew Carnegie, founder of U.S. Steel, devised a cost system that reported detailed unit cost figures for material and labor on a daily and weekly basis. The system gave senior management tight controls on operations, as well as timely information on marginal costs for pricing decisions. Other icons of American industry were also active in developing performance measures. As the nation's industrial base grew, managerial accounting continued to develop, primarily influenced by taxes and financial accounting requirements. But things began changing dramatically in the last quarter of the century. Rapid advances in technology and global competition transformed organizations and prompted managers to question whether traditional management accounting procedures were still appropriate. In addition to applying and managing new technology, corporations also had to place new emphasis on quality. In the 1970s and 80s, as reliable, reasonably priced Japanese products began to take significant market share from American manufacturers, it was clear that the consumer put a high priority on quality. American manufacturers were forced to make quality job one. They began to adopt Japanese management practices, which ironically were introduced to Japan by an American, Walter Deming. Manufacturers, merchandisers.
Okay. So you understand why there is a need of managerial accounting. Because from the beginning of this industrialization, the companies are becoming big and big, and they need to know that different kind of cost, different indicators to understand what's going on and how we are going to analyze for managerial perspective. So our chapter 1 is managerial accounting and the business environment, in which we talk about how the business is going to be run. So number first is, what do we mean by strategy? Because this is managerial accounting, which means accounting for the manager or managerial positions. So when we talk about the many managers, it means managers make decisions, right? So which kind of decisions they make? So let's talk about first the strategy. So a strategy is a game plan that enables a company to attract customers by distinguishing itself from competitors. So basically, a strategy is a long-term plan, right? Game-changing plan, in which you target that, okay, after 5 years, where we would be, like they say, that distinguish itself from competitors, right? How we are going to distinguish ourselves from competitor, and that's not going to happen in just 1 year. So it's like a long-term game plan or long-term planning. So the focal point of a company's strategy should be its target customers. And why is that? Because any strategy, any long-term planning should focus customers. Why? Because they are your prime indicators towards your survival. Right? Who pay the money? Who buy your products? Customers. And from the sales, everything depends on sales. We will talk about here when we talk about the budgeting and all the stuff. We call this master budget, and it starts from sales. So companies, all financial statements, the income statement, balance sheet, retained earnings statement, and cash flow statement, these all depends on your sales account, your sales projections, or whatsoever, right? We'll see over there that how we can create the the potential or budgeted income statements, budgeted financial statements, just based on sales, right? And who are the reasons, or who provide or who buy our products, or what are the reasons of increase in our sale account? Customers, right? So that's why the focal point should be, or focus should be given to customers. So since this is managerial accounting, it means managerial stuff is required. So it means management work is required. So I'm not going to spend more time here because that are the functions of management. You already studied in principles of management. And just going to be a revision here. Number one, so there are four kind of works: planning, directing, motivating, and controlling. So in this book, they have combined directing and motivating into one. So don't just get confused. So planning is basically, normally the plans from strategy, you develop plans. So strategy is basically a long-term plan. So long-term plan is called strategy. So whenever you heard the word strategy, it means it's a long-term plan, 2, 3 years, 4 years, 5 years, 10 years plan. So plan is basically when you just call about the planning, it means it is a short term, which is objective for the long term. How we can achieve short goals, or through short goals, and ultimately combining those short goals, we move forward to the longer term goals. So planning involves identifying the alternatives, and then when you identify the alternatives, then you select the best alternative, right, which suits your organizational objective, and then you develop accordingly. So you develop budgets to guide progress towards the selective goals, right? So for example, if you want to buy laptops for your employees, so you identify the alternatives. And alternatives identification involve, like for example, durability of the laptop, brand recognition of the laptop, quality of the laptop, and the different brand name organizations, and then you come up with your budget as well. Okay, the Apple is very good, but you cannot afford that one. It's very nice, but due to this affordability, you reject that one, right? And Windows Surface, it's very costly. Okay, then you develop that one. Okay, then you go to the next one and you find out, okay, the Dell, Asus, or maybe the Sony laptops, you can do that. Samsung is also there, HP is also there, and then you find out, okay, which one is best one, with satisfy your quality, affordability, and it's like free services, and other stuff, and then you buy that one. So buying the laptops, so did you buy it just for like recreational purposes, or you buy those laptops so that employees can play games, or you know develop faster reports, or use efficient skills regarding the Excel, PowerPoint, and other softwares. Of course, your focus would be the productivity, right? Not playing games. Okay, you bought computers, shifted from computers to laptop. And what are the reason? Okay, the employees can watch films. No. Okay, so it should be towards the organizational objectives, right? So that, okay, if employees is not coming, so don't worry about that. We have allowed them to take laptops to the home. They can work from home as well. So that also increases your productivity. It means your the time limit or the time boundary is not affected. Directing and motivating, which means you basically directing and motivating involves managing day-to-day activity to keep organization running smoothly. So which means you give direction to the employees, you give them work assignments. There are different types of work assignment. For example, work from anywhere, work smartly. I'm not going to give you 10 days. It's up to you whether you can complete in 5 days, whether you can complete in 10 days, 20 days. But remember that one, we need this report less than 30 days. That's it. So it's up to him whether he can spend whole night, 24 hours, work 24 hours and do that, and rest of the things he just enjoy 1 or 2 days, and then he can come up with that one. Okay, sir, I did that. I need appreciation. I need some kind of award. This kind of stuff. You can increase its bonuses. if he completed early. Routine problem solving, conflict resolution, effective communication. Remember, motivating the staff also can be affected by communication as well. If your communication is weak, and of course your employees' motivation is also weak, right? How is that? Can you give me the example? How communication can demotivate the employees? For example, the head office sent the manager some technology to be implemented, and manager told the employees. The head office says, okay, in 1 month, sorry about my writing, in 1 month, you need to apply a new version of Excel 360, for example, and every employee should transfer their files to the Office 365. But manager, he tell you after 20 days, so you have 10 days left. So there's going to be huge pressure on the employees. So it will demotivate the employees' performance. Why? Because during the office days, they are just backing up their data and then trying to learn the 365, the Office 365, and converting their files to Office 365. So those 10 days, the productivity going to be zero as compared to if you have given them 30 days. For example, you can say that, okay, 3 or 4 hours in a day you can allocate to your backup, convert your files into the Office 365 and upload it to the cloud setting, right? In that way, you can just have effective communication and also productivity as well. Plus, in the management, there is a change, right? This is also called the change. So anything that contradict your existing practices is called change, and people are not ready to change, right? So if this manager took 20 days to just decide that whether to tell the employees at the nick of time so that they have no other option, but he should be ready for one thing, that is change. Because people avoid change, they start questioning why there is a need of Office 365. We can do it in Office 2007. Why we need this kind of like stuff? And there is going to be a lot of queries and a lot of emails, a lot of feedbacks to the managers, and managers is like just fed up, and maybe he pressurized them to do that in 10 days, which also create a change resistance, and change resistance develop. Okay, change